The DAO of Capital by Mark Spitznagel. Picture this. A 16-year-old kid stands in the visitors' gallery of the Chicago Board of Trade, mesmerized. Below him, it's pure chaos, a kaleidoscope of brightly colored jackets, flailing arms, bodies shouting over each other. The whole thing pulses like a single living organism, with an energy he can't quite grasp. In that moment, Mark Spitznagel makes a life-changing decision. He scraps his hard-won plans to attend Juilliard for music and dives headfirst into the world of finance. Soon after, he finds a mentor, a legendary grain trader named Everett Klipp, who survived and thrived in the brutal futures markets for over 5 decades. Young Mark, bursting with ambition, peppers the old man with questions. Where are the markets headed? What do the supply reports say? But Klipp just shakes his head and offers the strangest advice imaginable. He leans in close and says, "You've got to love to lose money and hate to make money. But we are human beings. We love to make money and hate to lose money, so we must overcome that humanness about us." Love to lose money? Hate to make money? It sounds completely insane. It goes against every instinct we have. And yet, this single paradoxical idea unlocks one of the most powerful investment philosophies ever conceived. It's a secret that connects ancient Chinese wisdom, strategies of history's greatest military generals, the patient logic of a forest, and the principles of a little-known but profoundly influential school of economics. Today we're exploring that secret. We're diving into Mark Spitznagel's masterpiece, The DAO of Capital. This isn't just a book about investing. It's about strategy, about time, and about seeing the world in a fundamentally different way. By the end of our journey, you'll understand why the most direct path to success is almost never the best one. You'll learn the art of the roundabout, of going right in order to go left, and how taking a seemingly painful loss today can become the stepping stone to a much greater victory tomorrow. This is a lesson that can transform not just how you invest, but how you approach every significant decision in your life. To understand this bizarre wisdom of loving to lose, we need to return to that chaotic trading pit in Chicago with young Mark Spitznagel. His mentor, Everett Klipp, wasn't teaching him to predict the future. In fact, Klipp had total contempt for predictions. He used to say, "Guys who know where the market is heading are no longer at the Board of Trade. They are either retired or broke. And I can't think of any that are retired." So if it wasn't about predicting, what was it about? Klipp's method was deceptively simple. He taught that a trader in the pit had only 2 privileges. First, you can demand the edge, meaning you buy at the bid price and sell at the offer price, capturing that tiny spread. Second, and this was the cruel part, you give up that edge the moment you've made a mistake. If you buy something and the price immediately ticks down against you, you sell instantly. You take the small loss. You love to lose money. Why? Because, as Klipp drilled into him, there's only one thing that can hurt a trader, and that's a big loss. Therefore, you never, ever take a big loss. This means you must be willing to take many, many small ones. Most people can't do this. Our brains are wired for the opposite. We sweat through huge losses, hoping they'll turn around, and we snatch tiny profits the moment we see them, terrified they'll disappear. We crave the immediate win. Klipp's way was brutal because it forced you to look beyond the immediate sting of a loss and focus on the long game, the advantage of survival, of being able to play another day. What Spitznagel didn't know at the time was that this, Klipp's paradox, wasn't new. It was an echo of wisdom stretching back over 2.5 millennia to ancient China and a philosophy known as Taoism. The foundational text of Taoism, the Laozi, teaches that the best path to anything often lies through its opposite. You gain by losing. Victory comes not from charging headfirst into battle, but from the roundabout approach of waiting and preparing now to gain a greater advantage later. This idea emerged during a time of incredible violence and upheaval in China, known as the Warring States period. For nearly 2 centuries, the land was a battlefield. It was brutal, but it was also a fertile age for strategic thinking. Sages and generals had to figure out how to win, how to survive, when direct confrontation meant annihilation. The central concept they developed is called wu wei. It literally translates to, not doing, but it doesn't mean being passive, it means non-coercive action. It's the wisdom of knowing when to wait, when to let a process unfold on its own. The Laozi asks, who can wait quietly while the mud settles? Who can remain still until the moment of action? This waiting isn't about laziness, it's strategy. It's about willingly taking a step back, sacrificing the first move, in order to gain a superior position for a later, more decisive move. It's a kind of false humility that cloaks the art of manipulation. You humble yourself now so you can rise higher later. Perhaps the most beautiful physical expression of this idea is in the martial art of Taiji Quan, or Tai Chi. Legend says it was created by a Taoist priest who watched a fight between a magpie and a serpent. The bird was aggressive, constantly making direct attacks. But the serpent was soft and yielding. It moved with the magpie's attacks, complementing them, avoiding every decisive blow until the bird overextended itself, creating an opening. And in that moment the serpent struck. That is Wu Wei in action. It's the art of softness overcoming hardness. In Tai Chi, there's an exercise called Tuishu, or push hands. To an outsider, it looks like a slow, synchronized dance. But it's actually a cunning contest, where each person tries to unbalance the other. The real force isn't in the pushing, but in the yielding. The master guides their opponent's power into emptiness, destroying their balance, and then immediately attacks. You retreat in order to advance. You go right in order to ultimately go decisively left. This is the insidious strategy of guerrilla warfare, where a smaller, weaker force can defeat a mighty army by refusing a direct fight, by yielding and retreating, drawing the stronger force out until it's overextended and vulnerable. Spitznagel realized that Klipp's advice in the trading pit was a form of financial tushu. The edge came from patiently waiting for someone else's impatience. It was about responding to the urgent order flow, the desperate buyer or seller who had to act now. By providing them with immediacy, the patient trader could extract a small price, the edge. It was a process of advancing by retreating. This roundabout strategy isn't just a human invention. It's deeply embedded in the logic of the natural world. Spitznagel uses a powerful and recurring metaphor to explain this: the conifer tree. Think about a forest. You have two main types of trees competing for resources: the fast-growing angiosperms like oaks and maples, and the slower conifers like pines and firs. In a direct, head-to-head competition for the most fertile, sun-drenched soil, the angiosperms almost always win. They shoot up quickly, their broad leaves hogging the sunlight and shading out the slower-starting conifer seedlings. This is known as the slow seedling hypothesis. The conifers, when forced into a direct race, get stunted and sickly, never reaching their full potential. So how have conifers survived for over 300 million years, even predating the dinosaurs? They do it by playing a different game. They employ a roundabout strategy. Instead of fighting for the prime real estate, their wind-borne seeds retreat to the places where the competition can't thrive: the rocky, exposed ridges, the acidic soil, the harsh, cold climates of the great boreal forests that wrap around the northern part of our planet. It's not that they prefer these tough conditions, it's that these places offer a refuge, a place to grow without direct competition. This is the first step of their roundabout plan, a strategic retreat. By giving up the immediate advantage of fertile soil, they secure an intermediate position of advantage: survival. But the strategy doesn't end there. The conifer is patient. It falls behind early on, but it's not idle. It's assembling its assets. It develops strong roots to grip the rocky ground and thick bark for protection. Its needles are designed to conserve water and can last for several seasons, slowly accumulating a massive surface area for photosynthesis. It is a tortoise that, over time, is secretly building the engine of a hare. While the angiosperm sprints, the conifer builds a structure for long-term, efficient growth. And then, It waits for its moment. That moment often comes in the form of fire. A forest overgrown with fast-growing angiosperms becomes a tinderbox. A small natural wildfire, which is not a catastrophe, but a necessary part of the forest's life cycle, clears out the overgrowth. It reallocates resources, and in the newly cleared, nutrient-rich soil, the conifer makes its move. This is the brilliant second step, the counterattack. The conifers that retreated to the rocky outposts beyond the fire's reach now disperse their seeds into the fertile, empty land. Some conifer species even have what are called serotinous cones, which are sealed shut with resin and only open under the intense heat of a fire, releasing their seeds at the most opportune moment imaginable. This is nature's version of tuishu. The conifer yields to the angiosperm's initial push, retreating to the rocks. But when the angiosperm overextends itself and creates the conditions for fire, the conifer follows it back, seizing the advantage. It is a stunning example of seeding by not seeding, of gaining by losing. The conifer sacrifices the present state for a future, more dominant position. This same deep strategic logic can be found in the minds of history's greatest military thinkers. Spitznagel draws a fascinating parallel between two figures who, on the surface, seem like polar opposites. The ancient Chinese general Sun Wu, or Master's Son, author of The Art of War, and the 19th century Prussian general Karl von Clausewitz, author of On War. Sun Wu is famous for his indirect approach. His highest ideal is to subdue the enemy without fighting at all. This is achieved through a concept we've already touched on: shi. Shi is a wonderfully complex word that means potential, disposition, configuration, and, most importantly for a general, strategic advantage. It's about cultivating the influence of the present on the future. Imagine a crossbow. The power is not in the moment the arrow is fired. The power is in the potential energy stored in the drawn bowstring. A wise general, like a skilled archer, doesn't rush into action. He maneuvers his forces, positions them, upstream, building up that potential, that shi, until the moment is perfect and the release of energy is effortless and decisive. This is the strategy of Wu Wei in a military context. You march without appearing to move. You win the battle before it even begins. Clausewitz, on the other hand, is often misunderstood as an apostle of total war, of the all-out bloody frontal assault. But Spitznagel argues this is a profound misreading. Deep within Clausewitz's dense writing is the same roundabout logic. He used a framework of zeal, Mittel, und Zweck. Zweck is the ultimate end, the final objective, like winning the war and achieving peace. But you don't charge directly for the Zweck. Instead, you focus on achieving an intermediate aim, a zeal. This zeal, like capturing a key fortress or separating the enemy's forces, isn't the end in itself. It is the Mittel, the means, for obtaining the ultimate end more easily and effectively. Clausewitz advocated for weakening the enemy at certain focal points, or centers of gravity, before committing to a decisive battle. It's about husbanding your resources, even giving ground, to create a position of advantage from which the final blow will be all the more powerful. He understood, just like Sun Wu, what it meant to go right in order to go left more decisively. These two generals from different worlds, Sun Wu and Clausewitz, are not philosophical opponents, they are strategic twins. And their shared wisdom forms the bedrock of Spitznagel's investment philosophy. This roundabout path, shi, zeal, Mittel, und Zweck, finds its most rigorous expression in a school of economic thought that is the true heart of this book, the Austrian School of Economics. The Austrian School, founded in the late 19th century by Karl Menger, has a unique and powerful way of thinking about capital and economic growth. One of its central figures, Eugen von Bohm-Boverk, developed a concept that is the German equivalent of shi, Produktionsumweg, which means Roundabout production. To understand this, let's return to our old friend Robinson Crusoe, shipwrecked on his island. His most immediate need is food. He can try the direct path, wading into the water and trying to catch fish with his bare hands. He'll be busy all day, and maybe, if he's lucky, he'll catch a few. This is a hand-to-mouth existence. But Crusoe is smart. He realizes there's a better, more roundabout way. He decides to sacrifice some of his current consumption. He'll go a little hungry for a while. He'll catch fewer fish today so that he can spend time on an intermediate goal, building a tool. He carves a spear. Or better yet, he spends weeks weaving a net and hollowing out a log to make a canoe. This is production sum weg. He's not just taking longer for the sake of it. He's investing his time and energy into creating capital goods, tools that will make his future labor vastly more productive. He suffers a small, immediate loss of hunger for the sake of a much greater future gain. When his boat and net are finally finished, he can catch more fish in a couple of hours than he used to catch in an entire day. This is the essence of all economic progress. It's the story of humanity's rise from caves. We are the lucky heirs of countless generations who chose the roundabout path, who saved and invested in tools, who built the capital that makes our modern lives possible. The great entrepreneur, the hero of the Austrian narrative, is someone who excels at this. Spitznagel points to Henry Ford as the quintessential roundabout entrepreneur. Ford's genius wasn't just the assembly line. It was his obsession with vertical integration. He didn't just assemble cars. He built a vast, roundabout production structure that started with the raw materials themselves. He owned the iron and coal mines, the forests, the ships and railroads to transport the materials, the steel mills to process them, the power plants to run the factories, and finally, the assembly plants to build the cars. This took enormous patience and a staggering amount of reinvested capital. Ford famously distrusted Wall Street and its focus on short-term profits. He saw profit not as a reward for past performance, but as a fund to ensure future progress. He was patient in building his roundabout machine so that he could be intensely impatient in production, timing the output of a Model T down to the second. He took the long, difficult detour in order to create the fastest, most efficient path to his goal, a car for the masses. Now this all sounds wonderful. Be patient. Think long-term. Take the roundabout path. But if it's so effective, why doesn't everyone do it? This brings us to the most difficult part of the journey, the great human obstacle. The reason the roundabout path is the road least traveled is because our brains are wired against it. The Austrians, particularly Baumbaumwerk, were pioneers in understanding this, long before modern behavioral economics. The concept is called time preference. Simply put, we value the present more than the future. A bird in the hand is worth two in the bush. An apple today feels more valuable than 2 apples tomorrow. This makes perfect evolutionary sense. For our distant ancestors, the future was deeply uncertain. Overlooking an immediate source of food for a potential one later could be a fatal mistake. So we developed a strong bias for the now. But it gets even trickier. Our time preference isn't consistent. This is a phenomenon sometimes called hyperbolic discounting. Think about it this way. If I offer you 1 apple today, or 2 apples tomorrow, you might well choose the 1 apple today. The wait of 1 day feels agonizing. But if I offer you 1 apple in a year, or 2 apples in a year and 1 day, you would almost certainly choose to wait the extra day for the extra apple. Out in the distant future, that extra day of waiting feels insignificant. This is time inconsistency. We believe our future self will be patient, but our present self is hopelessly impatient. And of course, when the future arrives, it becomes the present, and we're just as impatient as we ever were. We are trapped in a cycle of procrastination and short-sightedness. Spitznagel tells the incredible and tragic story of Phineas Gage to illustrate the biological basis for this. Gage was a 19th-century railroad foreman, known for being responsible, capable, and level-headed. But one day, a freak accident sent a 3-foot-long iron tamping rod rocketing through his skull, destroying a large part of the frontal lobe of his brain. Miraculously, he survived. But he was a changed man. The new Phineas Gage was impulsive, profane, and utterly incapable of planning for the future. He lived only for the moment, for immediate desire, with no regard for consequences. Gage's case was one of the first pieces of evidence that our ability to make intertemporal choices, to curb our impulses and think about the future, is located in a specific part of our brain, the frontal lobe. This is our cool system, the contemplative, strategic, shay part of our brain. It battles for control against the hot system, the impulsive, emotional Lee part of our brain that demands immediate gratification. The famous marshmallow test with preschoolers perfectly captures this struggle. A child is offered 1 marshmallow now, or 2 if they can wait 15 minutes. The ability to delay gratification at that young age turned out to be a powerful predictor of future success, from higher test scores to better coping skills in adulthood. So we are biologically and psychologically predisposed to take the direct path, to grab the immediate reward. And in the modern world of investing, this tendency is magnified 1,000 times over. Wall Street is a world of extreme time pressure. A trader who doesn't make money now doesn't have a future. The entire system is built around immediate results, which makes the patient, roundabout strategy seem not just difficult, but irrational. And it gets even worse. This natural human weakness is systematically exploited and amplified by the one institution that is supposed to ensure economic stability: the central bank. This is where all the threads of Spitznagel's argument come together in a powerful critique of modern economic policy. He argues that the booms and busts of the business cycle are not natural features of capitalism. They are the direct result of central bank intervention, particularly the artificial manipulation of interest rates. Let's go back to our forest analogy. Remember how small, natural wildfires are a healthy and necessary part of the ecosystem? They clear out the weak and unhealthy growth and reallocate resources, preventing a catastrophic inferno. Now, imagine a well-meaning but misguided park ranger who adopts a policy of total fire suppression. Every tiny blaze is immediately extinguished. For a while the forest looks beautiful and calm, but beneath the surface, a dangerous situation is developing. Without the small fires to clear things out, the forest becomes unnaturally dense with overgrowth, sickly, spindly trees, all competing for the same limited resources. The whole system becomes a tinderbox, and when a fire inevitably starts, it's no longer a small cleansing event. It's a massive, uncontrollable inferno that destroys everything. This is what Spitznagel calls the Yellowstone effect, referring to the catastrophic fires of 1988 that were the direct result of a century of fire suppression. The Federal Reserve, Spitznagel argues, is that misguided park ranger. Starting with Alan Greenspan's response to the 1987 stock market crash, the Fed has adopted an implicit policy of financial fire suppression. Every time the market stumbles, every time a too-big-to-fail institution gets into trouble, the Fed rushes in with liquidity and artificially low interest rates to put out the fire. This creates a massive distortion. The interest rate is the most important price in an economy. It coordinates the decisions of savers and investors across time. A natural fall in interest rates signals that people are saving more and are willing to postpone consumption, freeing up real resources for entrepreneurs to invest in longer, more roundabout production processes. But when the central bank artificially forces interest rates down, it sends a false signal. It fools entrepreneurs into thinking there are more real savings available than there actually are. This encourages a wave of what the Austrians call malinvestment, investments in projects that are not supported by genuine consumer preferences and will only prove profitable as long as the cheap credit keeps flowing. It's like pouring fertilizer on the entire forest, encouraging everything to grow all at once, creating that same dense, unhealthy overgrowth. The economy experiences an artificial boom, a false prosperity. Spitznagel develops a brilliant tool to measure this distortion which he calls the Misesian Stationarity Index, or the MS Index. In simple terms, it compares the total market value of companies in the stock market to the replacement cost of their net assets. When the index is around 1, the economy is in a healthy state of balance, or stationarity. But when central bank distortion fuels a boom, the stock market value, the numerator, gets bid up far beyond the replacement value of the underlying assets, the denominator, and the MS index soars. A high MS index is the financial equivalent of a forest choked with tinder. It's a warning sign that a day of reckoning is coming. The boom is unsustainable. Eventually, the misallocated resources become apparent. The credit expansion has to stop, and the whole airy castle, as Mises called it, collapses. The bust is not the problem. It's the painful but necessary cure. It's the wildfire that purges the malinvestment and returns the system to homeostasis. So with this understanding, how does a wise investor navigate this distorted world? This brings us to the practical application of this whole philosophy, Austrian investing. Spitznagel outlines two complementary strategies. The first is Austrian Investing 1, exploiting the distortion. This is about recognizing when the MS index is dangerously high and preparing for the inevitable fire. A simple version of this is the Misesian strategy. Just get out of the market. Sell your stocks when the MS index is high and wait in the safety of cash or treasury bills. Spitznagel shows that over the last century, this simple strategy would have significantly outperformed a buy-and-hold approach. But it's incredibly difficult to do. It requires sitting on the sidelines, looking like a fool, while the party rages on and the distorted market climbs ever higher. A more sophisticated approach is what Spitznagel is famous for, tail hedging. This is the ultimate roundabout investment. Instead of just getting out of the market, you stay invested, but you allocate a very small portion of your portfolio, say 0.5% a year, to buying far out of the money put options. These are like tiny insurance policies that pay off massively only in the event of a severe market crash. Most of the time, these options expire worthless. You are loving to lose money. It's a constant, small bleed. But this small, immediate loss is the zeal, the intermediate step. It's the cost of building your capital-generating machine. The Zweck, the ultimate end, is what happens when the crash finally comes. Your puts explode in value, generating a huge amount of cash, precisely at the moment when everyone else is ruined, and assets are dirt cheap. The hedge is not just a shield. It is a weapon. It's the harpoon that allows you to hunt the whale. It's the serotinous cone, waiting for the fire to release its seeds into the fertile ground. This strategy turns a catastrophic crash into the greatest investment opportunity imaginable. Spitznagel makes a crucial point. These crashes are not black swans. A black swan is an event that is considered unforeseeable. But market crashes, he demonstrates, are not unforeseeable at all. They are the perfectly predictable consequence of the distortion measured by the MS index. The real black swan problem is not an unforeseeable event, but a foreseeable event that everyone else considers too remote to worry about. That's Austrian Investing 1. But it's only half the story. The other half is Austrian Investing 2, finding the Siegfrieds. This is about what to do with your capital for the long run, how to find those truly great, roundabout businesses. Spitznagel uses the mythical hero Siegfried as his model for the ideal company. Siegfried company has two key characteristics. First, it has a very high return on invested capital, known as ROIC. This means it's incredibly good at turning investment dollars into earnings. It has a special advantage, Wunderhorn, that makes it more efficient than its competitors. Second, it has a low Faustman ratio, meaning its market price is low relative to its replacement value. In other words, the market doesn't fully appreciate its superior productivity. Why would this happen? Because a true Siegfried is always reinvesting its profits back into the business, becoming ever more roundabout, building a deeper and more productive capital structure. This often means sacrificing short-term earnings. It's our conifer again, growing slowly at first while it builds its strength. Wall Street, with its obsession with next quarter's earnings, penalizes this. It sees a company that's spending heavily on research and development or new factories, and it sees depressed immediate profits, so it assigns it a low valuation. The Austrian investor understands what's really happening. They see the hungry Robinson Crusoe, who is not starving because he is lazy, but because he is busy building a net. They see the temporary dip in earnings not as a weakness, but as the price of building an unassailable long-term advantage. Spitznagel shows that a simple strategy of buying a portfolio of these high ROIC, low Faustman ratio companies has generated truly spectacular returns over the past several decades, far outperforming the general market and other value strategies. In the end, these two strategies are two sides of the same coin. They are the complete expression of the DAO of Capital. Austrian Investing 1 is the grand, strategic shy of positioning yourself to survive and thrive through the market's violent, distorted cycles. Austrian Investing 2 is the patient Baumbeworkian weg of accumulating truly productive capital. Together, they form a nested roundabout strategy. The first is used to deploy the second. It's a cohesive philosophy for navigating a distorted world, a way of being patient now so you can be strategically and powerfully impatient later. As we come to the end of our journey through the DAO of Capital, I find myself thinking about that image of the pine cone. Spitznagel's old mentor, Everett Klipp, used to say, "Anyone can see the pine cones in the tree. None can see the trees. None can foresee the forest in the pine cone." That, I believe, is the heart of this entire book. We live in a world that is obsessed with counting the pine cones. We measure success by the immediate, the visible, the tangible. Quarterly earnings reports, daily stock prices, the quick win. We are a society of lie strategists, always looking for the direct, frontal assault on our goals. What Mark Spitznagel has done is to remind us of a deeper, more ancient, and far more powerful logic. The logic of the forest, of the strategist, of the true entrepreneur. It's the logic that understands that the greatest strength is often built in quiet retreat, that the most decisive victory is prepared through patient positioning, that the most incredible growth comes from a willingness to first fall behind. The most profound lesson for me is the connection between this roundabout strategy and our own human nature. The book doesn't just tell us what to do, it explains why it's so incredibly hard to do it. Our brains, our culture, our financial systems, they all conspire to trap us in the tyranny of the present moment. They make us grab for the first marshmallow. And that's why this book is so important, especially today. We are living in what is perhaps the most distorted economic environment in history. The park rangers at the central banks, in their sincere effort to prevent any and all financial fires, have created the conditions for a historic inferno. The MS index, that brilliant gauge of distortion, has been flashing red for years. The message of the DAO of Capital is not one of doom and gloom. It is a message of profound optimism. It tells us that even in the midst of distortion, the homeostatic, self-correcting process of the market will eventually prevail. The fire will come. And for those who have prepared, for those who have cultivated the patience and the grit to follow the roundabout path, that fire will not be a catastrophe. It will be an opportunity. An opportunity to clear away the malinvestment and deploy capital into truly productive, value-creating enterprises. So how can we begin to apply this wisdom in our own lives? Starting today, here are a couple of simple thoughts. First, identify one important goal in your life, whether it's in your career, your health, or your learning, where you've been taking a direct, head-on approach. Now ask yourself, what would a roundabout path look like? What tool could you build? What intermediate position could you secure that would make achieving that ultimate goal easier in the future, even if it means a little sacrifice today? It could be as simple as spending an hour each weekend learning a new skill, instead of just trying to force a promotion at work. Second, practice the art of strategic patience. The next time the market is in a panic or a frenzy, resist the urge to act. Instead, just observe. Think about the MS index. Think about the fire in the forest. Ask yourself, is this a small, healthy fire, or is the tinderbox about to blow? By detaching from the immediate emotional pull, you begin to cultivate the mindset of the Austrian investor. That was a summary of the DAO of Capital by Mark Spitznagel. We've journeyed through its biggest ideas today, but I have to be honest with you. Listening to a summary is like looking at a map of a great mountain range. It can show you the peaks and the valleys, but it can never replace the experience of actually walking the trail yourself. The real magic of this book is in the connections it makes, the quiet moments when an ancient story suddenly illuminates a modern problem. This summary is your map, designed to help you decide if this is a journey you want to take. If anything we've talked about today has sparked your curiosity or challenged your thinking, I urge you to grab a copy. Reading it isn't just about learning. It's an experience that can fundamentally change the way you see time, strategy, and success. A link to the book is in the description. Also, if you found this journey valuable, please show your support by hitting that like button and subscribing to the channel. That way, you won't miss our next exploration into another life-changing book from the billionaire's bookshelf. Let's keep growing and thinking together.